Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Ted Dixon, CEO and co-founder of IncResearch.ca, Canada's first online financial news and research service, providing insider news and knowledge to investors. The home of the Canadian Insider Club, his website, CanadianInsider.com. Welcome back to the show, Ted.
Jim, thanks for having me back, and thanks for everyone tuning in.
The U.S. Treasury up to what this week?
U.S. Treasury has their hand out for cash, and they're saying, give me more. And in fact, just in the note and bond market alone, they're raising $183 billion. Okay, to think about that for a moment. $183 billion in 1 week, okay? And that's not including all the notes, the Treasury bills that they roll over every week, and there's a few billion of those that they're also needing funding for. So your listeners may recall in our last show, I suggested as we were heading towards March, we may be heading for some turbulence in the market, and you might want to put on your seatbelt, even though I think the voyage is we're still going into the direction of a nice sort of inflationary economy. There's going to be some bumpy patches along the way, and this period of the U.S. government having to come to the market, and this money has to come from somewhere, Jim, right? Like 183 billion is a lot of dough, and so it has to come from somewhere. Well, it's coming from investors and institutions, and that's having an impact in the stock market for two reasons. One, it's just the pure liquidity, that whole sucking sound that Uncle Sam is doing, taking the cash out of the system, but it's also pushing up interest rates too. So that's playing some havoc with valuations, including, especially long-dated stocks. So, I mean, like tech stocks, stocks that you've been willing to pay high multiples for because down the road they're going to have massive growth. You think you're going to have massive growth, so you're willing to pay up for that because interest rates are so low. You don't have to worry about discounting, like dividing that by competing alternatives in the bond market because, what's the difference if you're getting 1% on a 30-year bond? Does it really matter, how long you have to wait for, a software company to deliver profits down the road? But once you start seeing those interest rates double, then it becomes a different story. Institutional investors start thinking, oh, wait a minute, this isn't looking quite the deal that it did before because those cash flows now that we're missing and waiting for, now they're worth a bit more because the government's willing to pay us more interest. So it's having a ripple effect on the valuations. But, I think at this point, the bigger impact is just that need for the money to come out of the market. It has to come from somewhere. So there we go. I think we've seen some of that come out of the stock market, some of it come out of the crypto market. You've seen the Treasury zap the markets here this week, and so there's one more auction to go this week on Thursday, and then we'll see if things settle down. There's more to come in the coming weeks, but the good news per se is that the Democrats are sending signals that they expect the Biden stimulus package, I think, to be done by spring break. So just in time, Uncle Sam should be able to pump the economy with even more cash. So Uncle Sam taketh away, but Uncle Sam also giveth. And so they'll be giving back some of that liquidity to their favorite projects and recipients in time for spring break. So yeah, it's a nice it's a nice adventurous market we're going through, Jim, and unfortunately that means that there's some ups and downs. We've had a few bumps this week.
We'll have more with Ted Dixon right after this.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Welcome back. We're speaking with Ted Dixon. Ted, do you feel the crypto rally is more than just speculation?
Well, there's certainly an amount of speculation involved. There's no doubt about that when you see those kinds of runs. But just to sort of dismiss it as being a speculative event, I think is not to fully appreciate the magnitude of what is going on. And I don't think you don't have to go any further than the news today on Wednesday, where stock that we've been covering for our listeners for a number of years now. It's called VersaBank. It's a chartered Canadian bank that doesn't have any branches, so some of your listeners may not be familiar with it because you don't see it on the corner. But they're basically a virtual bank. They've had a very astute business model, a very targeted business model, a point-of-sale terminals, vending, for example. So, no, you don't see them, but and they did a very brilliant sort of funding strategy. They got into the essentially the bankruptcy and insolvency part of the market, where they're able to source a lot of their deposits from companies that are basically in receivership. So the cost for them to get those funds is pretty low. And so through a few innovative maneuvers, they've been able to grow their business under the radar, but they've been very profitable. The stock price has done very well, and today they surprised the market by saying they are going to be the first to launch a Canadian dollar stable coin. So that is a cryptocurrency in Canadian dollars that they are going to sponsor, and that sent the stock up, and some of the crypto stocks, Canadian crypto stocks, with it. And why would they be getting into this? I mean, is this just a gimmick, la-di-da-di-da, and no. There is a parallel financial system developing in crypto land, okay? It's called DeFi, decentralized finance, although some of the bigger applications out there aren't very decentralized. That's another story, but it's essentially a parallel financial system that's being developed, and you can go and put your stable coins on deposit with some of these cryptocurrency platforms and earn some interest, Jim. You can earn, like I was just looking today, for example, Aussie dollars swap rates on an exchange called Binance, which is, if not the largest cryptocurrency exchange, is one of the largest. It was almost 6%. Okay, now there's additional risk. This isn't like, putting in a term deposit that's guaranteed by the government. Far from it. But if you're going to search for yield in the banking system that's not guaranteed, you're taking risk anyway. So to get any kind of return, you do have to take some risk. And the rates you're seeing in the cryptocurrency area are quite competitive, and this has major implications for the financial industry, because while right now, it's if you're a financial advisor, you've been able to sort of ignore the space, and you've been able to tell your clients, well, it's risky, it's speculative. Well, that answer is not going to wash much longer. Yes, it is riskier, it is speculative, but everything in the market, Jim, is risky and speculative. Okay, these days. I mean, that's what central banks have done. They've pushed everyone into risky assets. So the fact that cryptocurrency is risky does not make it unique, okay? So you've got now a whole competing set of platforms in the cryptocurrency space that are offering very compelling interest rates. And now financial advisors have to tell their clients, well, we're looking at it because, of course, if you're a financial advisor at a large firm, you can't just go and plop your customers into these vehicles. You need to have your firm's approval, and the firm's got to go through its regulatory checklist. That takes time. But I can assure you that once you see companies like VersaBank issuing stable coins, most of the major charter banks have to be thinking about very seriously about this. So there is a lot going on. It means those companies that are listed in Canada, we've talked about them in some of our newsletters on KinSider.com, they're going to be attractive potential takeover targets, I think, in my opinion, right? If the space can, unless there's some kind of massive reversal in fortunes across the market and we have a major downturn, but even then, I think that would just accelerate the merger and acquisition activity in the space. It may not be at as attractive prices as you could potentially get now if there's a market move lower, and I'm not predicting that. But the point being is that this space is it's in play, and there's in play for a reason, because there's now opportunities there that didn't exist a year ago. You've seen one Canadian financial institution that's a charter bank make a move. It's a small one, but the other ones have noticed. And in fact, I'm sure, I bet on at least one major charter bank of the big five is working on some sort of on-ramp into the cryptocurrency space. I'd be shocked if they weren't all doing it to some degree. That's speculation on my part, but those, if any that aren't, then they're going to have to go shopping. They're going to have to pick up, some kind of assets out in the marketplace to get them into the space once they can get their regulatory ducks in line, and that takes time, because these larger institutions have a big fiduciary responsibility to their clients, so they can't just jump in and make mistakes willy-nilly. They've got to really do their homework. So it's taking them longer. They're bigger. They can pay up to get into the space once once they do their homework. So I think there's exciting times still ahead, and we're not. We've seen some excessive speculation in the cryptocurrency area, but there's more going on here than just a bunch of speculators batting around cryptocurrencies. There's an underlying trend that if you don't, if you're in the financial services sector and you're dismissing it as just speculation, then I think that's probably a miscalculation.
We'll have more with Ted Dixon right after this.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Ted Dixon. Ted, some people have said we're about to go into a commodity super cycle, and would that be good for a country like Canada that has a lot of natural resources like copper, zinc, nickel, things that are needed for this wave of electronic vehicles we're told to expect?
Well, Canada does have the potential to benefit from those resources, although I do get a chuckle when I hear our Prime Minister talk about us building electric vehicles for export. Well, where was our federal government 2 or 3 years ago on this? There are companies in Canada based in Vancouver that are building these electric vehicles in other countries because there was no leadership politically in Canada to build them. So, I take whatever these politicians say with a massive grain of salt, and anyway, we don't want to go there, Jim. I know we don't want to talk about politics, but it irks me when I hear that kind of talk. It's a little too late. Well, not too late, but, Canada really missed an opportunity at the higher end, at the manufacturing end. We blew it, just like we blew a lot of our response to COVID, okay? We blew it on the EV manufacturing side. Yeah, we can catch up. Yes, I know they're throwing money at it now. Yeah, blah, 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 big three this, big three that. The fact of the matter is a lot of the innovations coming from the smaller companies, and Ottawa was missing in action, okay? And so was Victoria. They all were missing in action, just like they were missing in action on COVID-19 at the beginning of the pandemic, okay? So we had a political failure at the manufacturing level. Fortunately, the bemoaned mining industry, which, so many environmentalists can't stand, and we keep hearing, if only we could do, more than mining. Well, guess what? Mining is our best bet to capitalize on the electric vehicle move because we have expertise in that area. Governments, we don't need government to come in and tell us what to do because governments, if anything, they try and stop mining. They don't try and promote it. But we have some momentum there in the mining industry. We've got lots of opportunities in these industrial metals. I think it's going to be a great period for industrial metals. Our indicators are still relatively upbeat in those areas. And I think those you'll have to be picky in terms of what companies you look at, but we've got plenty of opportunity. Companies that are looking for nickel and rare earth and cobalt, and it's a great time to sort of be looking in the Canadian market in that area. And I think and the other aspect is there aren't that many really quality industrial metal mining companies around. So, investors will have to be picky. They have to be careful of scams and promotions that are not backed by quality assets. And that's where insiders can help. You have to, as we talked about in, I believe it was the last show, to see how much insider ownership that some of these companies have, how much skin is in the game. It's not, it's not going to guarantee success, but certainly, if you've got a highly touted company that says they've got the biggest, cobalt mine or whatever, and the insiders don't have a lot of stock in it, then, you might want to do a little bit more digging pardon the pun, what the company's doing. But sure, there's going to be plenty of opportunity, and it's going to be really a great time. I still think we're in the sort of middle innings of this cycle for industrial miners. So it's a really good time for the mining industry for sure.
Why should you look for insider buying when you're looking at stock?
Right. Well, yeah, this gets into sort of, I think, one of the important educational aspects of what I was hoping to talk about today. And, we are in a bit of a hot market, so what you want to keep your eye open for is when insiders are buying in a stock that's going up, because you don't see that too often. And, in fact, generally, the natural instinct of an insider is to sell when a stock is going up. So if you can come across some meaningful insider buying when the stock is going up, and we've talked about a couple of those instances in the cryptocurrency space in our Canadian Insider Insights newsletter on CanadianInsider.com. That can be very helpful in giving you the context of whether this is a bona fide growth opportunity, and give you perhaps some comfort that this is not just sort of wild speculation, that there is growth opportunities, that insiders are still buying, paying out of their money out of their own pocket. We're talking about public market buying, where they're going in and spending money to purchase shares, even though the stock has gone up. So you want to look for those. Those don't happen that often, and but when they do, that's something you definitely want to consider, and maybe take a look at that company a little deeper for the opportunity that might be there.
Ted, thank you so much for chatting with us.
Jim, thanks for having me back. Really appreciate it.
My guest has been Ted Dixon, CEO and co-founder of IncResearch.ca, his website, CanadianInsider.com, home of the Canadian Insider Club. If you have any questions for Ted or any of our other guests, you can send them to info@howstreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.